Well, we have central banks that are resuming quantitative easing. Even our central bank, the Federal Reserve, is now buying short-term instruments. They don't want to call it quantitative easing.
It is quantitative easing,
right? And so they're buying more instruments. So we have a very supportive central bank regime worldwide. U.S. growth is at least 2%. China growth is somewhere between 5.8 and 6.2. Despite we're paying so much attention to the political and geopolitical issues that we're losing sight that the world still is moving forward. And so I think that's one of the big issues that's going on now. It's not great, but it's not as bad as we feel every morning we wake up.
You know, we just talked about a Bill Gross call where he said all of these negative interest rates around the globe, $17 trillion worth of it, he thinks that that's going to put a real limit on the amount of upside that you see to equities, because he said in the past a strong equity market has been tied to real low rates, and there's too much other things that are happening. I mean, I kind of look at it as the opposite, where if you have negative interest rates and you're paying somebody to hold your money in bonds, it definitely makes equities look more attractive by comparison.
I understand your point, and your point is well taken. What I believe the problem is the transmission of negative rates. So in Europe and Japan, where we have negative rates, they don't have a mortgage market. Most consumers there own their home. If they own their home, they own it in total. They don't have a mortgage. Mm-hmm. And because of that, you don't see the transmission from lower rates that translates into a lower mortgage rate, and the consumer gets $50.
Right.
So in Europe and Japan, I'm struggling with the concept of negative rates because you don't see that consumer transmission. Mm-hmm. In addition, you have the banks who are struggling with their net interest margin because of negative interest rates. They're not going to be out there lending and lending and lending. And so I don't believe negative rates and persistence negative rates translates into more economic activity. It may translate into a depressive element to the economy, especially in Europe and Japan, where 82% of savings is in a bank account. So they're not enjoying the success that Americans do with low or negative interest rates.